Hello, everybody. I hope you're having a fantastic day. Today was an absolute barn burner, or as my man Amit in his morning lives likes to say, a face melter. Everything went up today, but in particular, a set of stocks, a certain sector went up more so than the rest of the broader market. And this sector happens to be the fintech sector. Stocks like Sofi and Robinhood and PayPal and Square and Marqeta and Nubank and any other fintech under the sun that's not a complete shit company did well today. And not just like 1 or 2%, but 5+%. And the question is, why? Why did fintech do so good today? Why did the stock market do so good today in general? The main reason is CPI came in, and it came in better than the most bullish expectations. The expectations was 3.3 to 3.5%. We came in unchanged from last month at 3.2%. Literally everything is going down, and the last stronghold, the Alamo, so to speak, happens to be inflation due to real estate or shelter. Now, that's around 35% of all CPI data and around 45% of core CPI data. So once shelter goes down, everything should start mooning up, which is what we're looking forward to in 2024. Now, I'm going to show you a couple of charts in just a moment, but the question is, why does fintech go up as CPI goes down? Well, two main reasons. As the CPI starts going down better than expected, remember, we went all the way from like 9% CPI, 9% inflation, to right now, low threes, which is very close to 2%. Now, the target of the Federal Reserve kind of is 2% flat. Honestly, I don't think they're going to be raising rates anymore unless something out of the ordinary happens. They didn't raise rates last meeting, and they're not going to be raising rates this coming meeting. If you want to see what analysts are saying, I'll show you in just a moment. But I've been saying this for quite a while. As a matter of fact, I think in 2024, they will be lowering rates. And I've been saying this for a while. It's not like I'm just jumping on the bandwagon. I've been telling people on this channel for quite a while. As a matter of fact, I predicted that they're going to be raising rates until around 5.25. And I think they're at like what, 5.5, 5.75 right now. So I was not too far off. The reason why this is good twofolds is number one, the 10-year Treasury yield is going down. And if the 10-year Treasury yield is going down, that's saying that inflation in 10 years from now is not going to be here, which means that there's going to be a rush to equities. Before, people were investing in bonds and bills and something safe, getting over 5% annual percentage yield, pretty much risk-free. Well, as CPI is going down and the 10-year yield is going down, that means that risk-free investment returns are also going down. And as those are starting to go down, and I want to stress the word starting, well, there's going to be more and more money coming into the stock market or equities. So that's one reason in general, the broader crypto market. But why specifically fintech? Specifically fintech, because if inflation is under control, your money is now going to be more valuable. Remember, there is a wage spiral. As inflation goes up, workers ask for more money. You're going to get more money, but inflation is going to keep going up because employers are just going to raise their rates on their goods or services to compensate for the raise in salary. But if inflation is going up 5%, the raise in salary is only going to be 3%, for example. But they're still going to be raising goods more than 3%, or cost of services more than 3%. And then guess what? Same employers are going to come back in 6 months or a year and say, hey, I need another raise. And this is a price spiral or wage spiral. Because that is happening, fintech is extremely unstable. Once inflation is starting to get under control, more and more people are going to be spending money. Now, again, this is just the beginning. This is just the start. That's why specifically fintech did really, really good today. Now I'm going to go a little deeper of fintech. And in some cases like Sofi, they are a bank. In some cases in fintech, they offer bank-like services, but not a full-fledged bank. That's okay. As CPI goes down, as inflation goes down, as the 10-year yield go down, as the wage spiral is no longer out of control, people are going to be spending more money. Now, I want to say that this is just the start. The economy was slow, then it heated up, then it was out of control. Right now, it's starting to cool off just a little bit, but eventually it will cool down, and then we need to light a fire in the economy again. And I believe that fire is going to be lit somewhere towards the end of 2024, beginning of 2025, and rates are going to be stable and begin to get lowered, I believe, in the first half of 2024. Maybe this is super aggressive. Maybe this is wishful thinking, but that's my personal opinion and something that I've been saying literally for the last year on this channel. As that's going to happen, more and more people are going to be investing in fintech, but more importantly, using fintech for what it was intended to be used for, specific types of fintechs for specific type of services, but also in general, the broader banking market. More lending, more spending, more credit cards, more stable economy means you understand what's happening and you're not saving as much. You are now starting to spend again. This is very good for fintech, and this is why I believe fintech was up like crazy today. Take a look at the screen. Guys, Sofi was up 6.25%. Now it's at 750 again. Robinhood was up 2.29%, breaking the 850 mark. PayPal, it's been a very long time, was up 4.2%, currently trading at 56.7. Square up 5.9%, currently at $55.10. Ally Financial, which is very close to a Sofi, not exactly. Sofi is obviously a lot better, but you see the comparison, up 6.2% at $27. MQ or Marqeta was up 7% for $6.28. For shits and giggles, TFC was up 5.55%. They are not exactly a fintech. They are a financial company, and in some cases, a fintech, now trading at $31. This is another bank, Zion Bank, 8% up. KeyBank, 9.8% up. KRE, which is the regional ETF, 7.3% up. This is another regional ETF from iShares, 6% up at $35. As you can see, the entire market is going crazy, and this is the actual treasury yields at 4.45%. Now, if you go back for the last month, the treasury yields was all the way up to 5%. Now, it doesn't seem like a lot, but 5% going to 4.5% is absolutely freaking massive and makes it interesting that instead of putting your money into a bond, into a bill, into a treasury, whatever, so on and so forth, you rather put your money in fintech and financial companies all the same. Now, there's going to be some winners and there's going to be some losers. And I think companies like traditional banks, which for me is Truist Financial, ticker symbol TFC. But since nobody cares about that, let's talk about the actual winner that I'm going to see, which is going to be Sofi. Sofi for me is the number one pick for the fintech sector, followed by Robinhood. I know you might think I'm going to say PayPal, but I think Robinhood has a lot of things going for it besides for just fintech, but the investment and what's about to happen in crypto. Now, I might be the minority in my thinking when it comes to Robinhood, but I do think that it's going to outperform and extremely surprise so many people and haters. PayPal Little bit of a problem with PayPal. I thought that the transaction margins are going to invert. I thought there was going to be an inflection as per the management of PayPal. That's what they kept saying Q4. They backtracked and said, nope, it's still going to go down, but significantly less than last quarter. And last quarter was the best quarter they had in a very long time. If they don't do that, it's going to be fucked. But my number one pick right now for fintech and one of the most undervalued stocks is Sofi. Because unlike PayPal, unlike Robinhood, unlike a lot of other companies, Marqeta, and I don't really follow Square. I sold out of my Square position, but I don't know how they did in their earnings. SoFi is doing triple beats across the board for the last 2 quarters, and essentially for the last year had amazing results when it came to their earnings. EPS beats, revenue beats, forward moving guidance beats, and they're about to be GAAP profitable in Q4 of 2023. I'm predicting, I assume. It looks like they're really going to be focusing on 4 GAAP profitable quarters for the entire 2024, Q1, 2, 3, and 4. And in 2025, probably in the second half, they're going to try to be included in the S&P 500, similar to what currently is happening to PALANTIR. I think there's going to be a shift in spending and there's going to be a shift in investment focus. And one of those shifts is going to be huge on fintechs. My number one fintech play is SoFi. One of the main reasons is the tutelage and the leadership of Anthony Noto. Anthony Noto literally dropped $300K to buy the dip. And so did, I believe, the CFO put in $100K to buy the dip. And some people said, oh, Adam, they're just trying to stop the bleeding. Who gives a fuck? That's the whole point of this shit. Of course they're trying to stop the bleeding, but they're doing more than 99% of all the other C-level executives for any company out there. By investing that money, they are putting a Band-Aid on the bleeding. They're saying this company is severely undervalued and we put our money where our mouth is. We don't just walk the walk. We don't just talk the talk. We walk the walk. There's a big difference. So in general, I think everyone's going to be good with certain fintech plays and financial plays like banks in 2024 when they reduce rates. But for me, SoFi is a perfect play. Now, I do love Truist, but nobody wants to talk about Truist because it's a boring, traditional bank stock. I'm not going to be selling my Truist. I absolutely freaking love it, and I love collecting my dividends for Truist. That is my retirement play. One more big hit between Palantir and crypto and SoFi, and I'll be good. Guys, thank you so much. In the comments, let me know down below. Are you buying? Did you buy the dip? I was buying a lot between that 8 and 850 range of SoFi. I ended up scooping up like 2,000 plus shares, and I doubled up my position for options. At the end of the day, I am down on my options, but at one point I remember I was up like 200-300%. Hopefully I'll be in that same situation again in 2024. And remember, as the economy starts slowing down or there's going to be the R word of a recession, whether it comes or not, now the Federal Reserve has options of dropping interest rates to reignite, and set a fire under the economy. They can accelerate the economy now, and they actually have ammunition to do it. I want to show you one last thing. Guys, this is the CME Fed Watch. This is the futures for the Federal Reserve. You can literally bet on anything. Okay, so the current rate is 5.25 to 5.50. I was calling 5.25, I believe, on this channel, so I'm off by around 0.5%. Very good. They are saying 2.4% is saying that they're actually going to drop the rates. Oh, wow. This is brand new. That is crazy. So for the December meeting, right, December 13th, 97.6% are saying that they're not going to be raising rates. 0% are saying that they are going to be raising rates. And I did not see this earlier. I was actually watching Sasha Yashin's channel. Shout out to him. I know he's not a fan of Palantir, but he really got good content. I really enjoy his content. No hate. And when he was talking about this, I did not see this. I did not see a drop in rates. They're saying that the Federal Reserve might even drop rates. If this happens, which I don't think it's going to happen, but if this happens, we are going to the moon in 2024. But that's what I'm saying. I believe that they're going to be dropping rates a lot sooner. Let's go to May, because I think the first half. See, by May, they are saying there's a 33% chance that the rates are going to drop. 33% chance. And the plus this 1.7, which says that it's going to drop by 0.5%. So guys, around 35% chance by May, we're going to get a rate reduction. That's what I believe is going to happen. The first half. Let's see by June. By June, this number goes up drastically. By June, remember I said, guys, and you could track my videos, the first half of 2024, they're going to lower rates. June would be the first half as well. So 37.5 plus 6 and plus 0.3, we have 38. There's a 44% chance that there's going to be some type of a rate reduction in the first half of 2024. If that can happen, then it's adios, see you later, see you mañana. We're going to the freaking moon. And fintech is going to be right there leading the charge. Guys, thank you so much. Don't forget to comment down below. I really do appreciate it. Have a great day.